Hi everybody, so in this video I would like to talk about the one of first system that I use when I starting to trade on bond markets. It's very easy to know, and I still use that for confirming me the pattern when I would like to take a position in a in a great direction, like bullish or bearish, depends on the market that I'm faced on. And it's very a nice strategy, technical strategy that I would like to share with you if you're interested, because most of our American day traders use that in the trading floor. That so it's the first time to discover me. My name is François. I'm the main trainer and founder of GSTA, which is Global Street Trader Academy, where we teach people how to trade stock, bond, ETF, forward contract, future contract, those stuff. And so it's a nice academy. Very proud of that we provide daily, weekly video content as these things that we record now. So if you're interested, we can take a look quickly to see the content, to see the services that we offer. And eventually also we can, keep in touch for sure, right? Okay, so I would like to talk to, at this video for the H pattern and the U pattern and the psi pattern. It sounds like a new for you, I know, because most of traders used to have to talk about like a chartism pattern, or technical configuration on the candle as like Marubozu, Arami, Doji, those stuff, or ascending wedge, descending channel, head and shoulder, those kind of things. But tonight I would like to show you the pattern of the U pattern, H pattern, or the psi pattern, right? Free pattern, basic observation, basic pattern that American day traders, swing trader, or scalper use that. I would not to say for scalper, I would say most of day traders and swing traders, right? Because we used to have like a data for to doing some like this pattern especially. Okay, so basically you used to see a representation, graphic representation, as something like that. Okay, right? So actually this is a candle, bullish candle that you used to see when you doing trading. So it is Japanese candlestick, right? You use also to see those kind of things, right? Same thing as well, but the color is a bit different. So let's say, right, so this is actually white candle here and red candle or black candle, which is bearish candle, right? You used to see that, right? I'm not good at drawing, but I do my best. Okay, so don't laugh at me. And we do have a doji, which is a cross, right? We don't see if it's bullish or if it's bearish. It's just a cross, right? So here is the high for the bullish candle. Here is the low. Here is the open. Here it's open here, and here is the close, right? So high, low, open, and close for the bullish. And for the bearish candle, here is the low, like here it's the low, here it's the close, here is also the high, and here is the open, right? Open. So we have the low, the close here, the open here, and the high, right? And doji, it's still close where he is open, right? So there's no a certain direction of the markets, right? Here, close equal open, right? Even is doing high and low, right? So this is the basic representation of candlestick that you used to see through your different platform of trading on when you're starting to do trading. Is that most of people will teach you, okay? But tonight we see also we call that bar chart or American candlestick. We have a Japanese candlestick as we draw right now, and we have also American candlestick, which is very simple, which is like this. You know, you have this kind of representation, but it's writing, it's meaning the same information. The previous, like the Japanese candlestick, show with color. It's more visualizing, right? When we see a candle, we pretty much know that this is a bullish candle and this is a bearish candle, right? But this one is just like the is looking at like just the wicks, right? And we do also have the color of that. It could be green or it could be red too, but it's giving actually the same information. So here we have also the low. We can have here the open or the bullish. We have the close here. So it depends the type of the color of the the color of the wicks that we have, right? And you have also here the high, right? So same thing, high, low, close, open. Exactly also the same thing here as the low. I can, right, put that here. So here is still high, low. The only difference is the inverse. Here we do have the open, there we have the close. So here we have the open, and there you have the close. So this is, here it's bullish candle, and here is bearish candle, right? So bearish candle, bullish candle, okay? So it is still the same information, but people don't use that because it's not very attractive. It's not very, it doesn't mean anything to people when they see like the American bar chart, American candlestick, or the bar chart as we call. But it's extremely great to use that. Very, very good, because when you watch this American candlestick or the bar chart, you can also make a great strategy, and it can confirm you if you're going to the right direction or if you are wrong. Especially the same others candlestick that we don't see in this video, we see through the training courses, which we call the Eiken Ashi, which is another representation of Japanese candlestick. It's just like for smoothing the trend, and it show you with just the color. So it's just beautiful for the visualization, right? But here, in terms of like the American candlestick, it's just based on the fact that we looking for the true pattern, as I call today the H pattern, the U pattern, the psi. So psi pattern is like for the Greek alphabet representation. So we call that psi. Okay, so psi pattern or inverted psi pattern. So basically like this. So inverted pattern, right? And also U pattern, we do have also inverted as well. But for the H, there's one pattern. Even it's inverted or not, it's still H, right? If you invert that, it's still also H. U pattern, if inverted, you have something like that, right? And psi pattern, we do have like this regular, and inverted pattern, you have that. So basically, this pattern that I would like to explain to you, it's all about like it's, you know, you have a kind of like a trend market, or you know, you have a momentum upcoming. So it will tell you like get ready for the next, you know, the next flow will be probably bullish or bearish, or you know, those kind of things. Or it could be also show you or explain to you a continuation strategy, or also a reversal strategy, right? Depends on the fact that the market you know, evolve, right? So let's start to the H pattern. Okay, so the camera is still like, okay, so that's film now. So the H pattern, we said that the H pattern is something like that, right? H, right? H pattern. But in terms of like the bar chart or the American candlestick, it will be something like this, right? So the market starting like this. So we open here, we close here. So when we open here, we're going low a bit. After we doing rejection, we're going high, and then we close here, right? So the next candle, if we starting here, because we close here and the next candle we open on the same level, we're doing here a bit on the top, and then we going back here and we close here like this. This is H pattern, okay? Or we can have another representation, which is something like this. So same principle, right? Right? This is H pattern. So if you see that this pattern, which is the H pattern, it's probably, it will tell you that very careful, we're pretty close to, you know, going down, because it's like it shows you that the market trying to pushing higher and he failed. So now the buyers, which is they buy to the demand zone, as we saw with previous video, they were starting to get rid of the money to their position. They will like decrease the size of the position. So if they, you know, putting a lot of contract of or size of lots of the forex, depending on the market that you trade, and then they drastically decrease the size of the position, you will see probably the market could go down, 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 right? But this pattern, if you see that, which will precede by uptrend first, that's exactly the pattern that we're looking for, because the market still starting to going up, is doing the H pattern, and then now is continuing to going down, right? And it's exactly the same thing. If you also see the market starting to going, let's say, down, 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 right? And then we see like the appearance of the H pattern. That being said, you need to starting to, you know, doing looking to buy a market, to buy the markets. So you're probably going up. So it depends the way as you be on the market, right? You could be if the position has been preceded by the downtrend, and we doing the appearance of the H pattern precede to the downtrend movement, you have to starting to buy the market, looking to buy the market, and doing vice versa. If it's starting to doing the precede to uptrend market, and then you see the H pattern, and then we starting to short the market, because it will show you that the market starting to fail, right? So you have this kind of representation, okay? Also, we do have also the same thing as the U, right? The U pattern. So U pattern sometimes it's a bit you know, coinciding with the psi pattern, okay? So U is just based on the form, the shape of the shape of the movement. So let's consider that we do have like a downtrend, and from here, because a market didn't you know, leave downtrend and going to the uptrend, we do have like a couple phases of pause, of a brief, you know, lateralization, and then after that it could now starting to go into the uptrend movement. So we do have like this kind of rounding. That's what we call rounding bottom, but rounding bottom is a U pattern basically, right? So rounding pattern or rounding bottom or U pattern is the fact that we do have kind of this movement, right? So if I draw very small, but it's a succession, right, of movement here, a succession of movement. So we could have like a couple of very small American candlestick of or bar chart are very small to the rounding, and then the market starting to going up. You have to look into to see that. So this is that's what they call the U pattern. But I agree that U pattern is close to the psi pattern. The only difference is between the U and the psi. It's the U pattern. It's the fact that we do have a succession of very small, you know, bar chart or American candlestick, and then we have a massive candle which is starting to show like the you know, to show the next potential way of the market. But the side pattern, which is something like this, right? It's the market starting like this, right? And after that we is starting another here. It going a bit on the top, and then it dropping massively, and it close. So let me draw that very well for you. So it's starting here, it's closing here, right? And then we do have like the market open here, it's coming to the low, and after you're doing a massive rejection, and it closed here. So now when he's starting to, to open the market here, he probably doing this movement to the same level here, and then the coming to the top, right? And it will closing somewhere here, right? So if you're seeing this kind of pattern, it's kind of a side pattern, right? Because you see this one and you see this one, right? So that's why we call side pattern. Or you can also see this kind of side pattern. So you have very small here, so open here and close here. After we have open here, market drop, and after we have like a solid recover, and after he's starting to the same level here, or he's dropping, he has a huge level to reject the market, so they're pushing higher, and they're starting here to do these things, right? Let me show you. Right? This is the pure okay, so this is the pure side pattern, right? So we have a very small candle here at the open and close here. After he's starting to open here, he's doing a massive movement to going down. After he has been rejected, he closed that, and now we have a new open here, and then he's doing this one. So if you're doing these things, proceed to the uptrend markets. So uptrend market, if you're doing that to the precede the uptrend market, that being the movement will be in continuation. So basically the H pattern or U pattern, it's reversal, right? It's a reversal market, and the side pattern is for continuation. Okay, it could be bearish continuation or bullish continuation. So market could going up, right? These things. We have also an inverted side, right? So it's exactly the same thing but the opposite. So the market starting like this, right? And after we have a massive bullish candle, and after the market starting to doing here, right? These things, you say it's a side inverted pattern. So these things, if you see that precede to the downtrend, that being said, the market could continue to going down, right? And exactly the same thing as the opposite. Okay, so basically is that I would like to teach you about, like the we will see an example. Also I will record another video in the charts, the graphic. You will see what pattern that I discussed today. I would like just to show you how to draw that. It wasn't easy because I don't used to, to draw like a candle, all the stuff, but I'm pretty much sure that you understand where I would like to go, because it's just to, visualize like the idea and the logic, and when you will be faced to the market, and if you want to take a decision to buy or short the market, you can take a look to the American candlestick. It's exactly the same thing as a candle, Japanese candle, as I said, because it shows you the same information. The information that you would like to know, it's low, high, close, and open, and the color of that. The others is more visualistic. For the Japanese candlestick, it's more visualistic, but the American candlestick or the bar charts, it's a very simple representation of graphic representation of the price, right? But it still works. It's very good. I also teach that through my through the GTP, the Global Trading Program. I show to the people how to use this pattern, which is very simple to use, and it's just let you know for confirming the uptrend upcoming, right? And especially if you take a look on the long-term candle, you will probably be in the you'll be in the next momentum upcoming, because it will tell you the next potential movement that you have to looking for on the market. Okay, so thank you so much for watching this video. If you like, if you feel that this video has been like very informative, so please let us know that by liking and share to your friend and all your all people which have interest in trading eventually. You can take a look also to our website www.globalstreettrader.com to see the services and the framework, the framework and also mentoring program that we offered. You can also take a look on my TradingView profile as a Frank Belfort. There I just doing post articles, market strategy, and also especially also the weekly market analysis that I did already each Monday. This time I've been like a bit busy with like other students, but I already I'm come back to the next weekend, and I'm starting to putting my daily research and point of view on financial market. So thank you so much for watching this video. See you around. Bye bye.